Hello everyone. Iceberg orders can be very powerful tool to enhance your trading results, and the theory behind it is pretty simple. But in real life, things are a little more complicated, and I'm going to show you some of those intricacies and pro tips how to trade icebergs with some real life examples of when it works and when not and why. And this is something most of other videos or articles won't give you. Let's get started. I will start with the basic theory for those of you who need it or want to refresh it. Rest of you can skip this chapter and go straight for the advanced stuff. So what is an iceberg order? It's an execution tactic where institutional traders are splitting big orders into small, visible portions to hide its full size and to minimize the market impact. For example, institutional buyer will buy 1,000 ES contracts. If he just sent a buy limit order to the market, everyone would see his intentions and will try to capitalize on it. Price will go up before he gets all 1,000 contracts at their current price. So what he does instead, he sends an iceberg order and he sets the visibility to just 10 contracts. That means everyone can see a buy limit order for 10 contracts, and when it gets filled, another order for another 10 contracts appears. So what you see as a result is an absorption event. All sellers get absorbed, the price isn't going lower, and the order reappears is the same size of 10 contracts. When the iceberg gets fully filled, the price can move significantly, most of the time in the direction of the iceberg order. This is the case for most big iceberg orders with size 1,000 plus on ES. But what others often won't tell you, those big icebergs are rare. And if you are a day trader, you will need to understand the dynamic of smaller iceberg orders. And this is when things get a bit complicated. Now it's time to show you some real-life examples with deeper analysis. Example number 1 is straightforward. 2 iceberg orders on NQ got filled, totaling 94 contracts, and it just happened around the bottom of this move. You can also see many limit orders under the current price, creating a strong support, and you also see how the selling, red dots, changed into buying, green dots. The result, we have got this nice upward move. The last clue is visible on the candlestick chart. We are touching the weekly VWAP. So we have a lot of confluence, meaning a lot of conviction in the trade. And such setups are exactly what we focus on in our Discord community, and there are plenty of them every week. Join the free version, link below, to get some more insight, or even free help and advice for your own trades and strategies. Sample number 2 will explain why you can't just blindly react to every iceberg you will see, and how the overall context matters. The first bulk of icebergs didn't stop to move upwards, and the price has got through all the sell orders, but a second attempt on higher price was successful and caused a reversal. So sometimes the first attempt creates the left shoulder, and the head comes later. And the big question here is how to tell where the price really stops. And there are some useful clues you can use, but to be completely honest with you, it is not possible to be able to tell every single time, and you will sometimes get stopped. This is the risk of trading. But if you know the setup well, you might get chance to re-enter at the head. The probability of getting even higher is low, So it is an option. Now back to the clues. I won't give you all of them, but look at this one. On the chart, the first attempt didn't touch the first standard deviation of weekly VWAP, and we have not reached the previous stop on ES yet. You can also filter out some false signals when you use the heatmap for both ES and NQ together. Example number 3 describes a relative common situation on ES, where a big iceberg order appears, but the price doesn't stop right there, and the real bounce comes a few points later. At the first glance, this looks like a very unpleasant complication. But there is a way how to profit from this, because there is a high probability that the price will bounce back to the iceberg, and most likely even a bit higher. When you look at the chart, you can see that this iceberg appeared at a strange spot, kind of in the middle of nowhere. This is the first clue that we shouldn't just buy it. And the bounce comes once we hit the first standard deviation of weekly VWAP, the green line. In the heat map, we see that the point of control, the yellow line, just moved to the same spot where the iceberg appeared, but we don't see a strong support underneath. No big passive buy orders here, and also when we reach the bottom. At the bottom, we only have a small stop run, but nothing significant. So the only way you could tell the bounce should happen exactly there was the weekly VWAP and the small stop run. So it is a more risky scalping opportunity, and I wouldn't recommend it to beginners. What makes it interesting is the high probability of a bounce back to the iceberg or even higher. Sometimes you can even catch a major reversal with this technique, but in our example, it was just a small bounce and the price continued lower. But you also see that we came back above this iceberg later in the day, which is not guaranteed and a setup itself, but it might be a small clue for our later trades. Our last example shows a situation where the iceberg orders could cause more damage than good if you don't understand the context well. You can see we have a lot of buy orders hidden in icebergs, but the price doesn't care and continues lower. But you see 20 contracts icebergs on the sell side, showing us turning points for another push lower. So the broader context is important, and if you have a strong momentum, you only should look for signals in the direction of the move until the price reaches an important resistance. So what's the conclusion? Seeing the iceberg orders can be very beneficial when combined with other techniques and broader context. But it is not a green light, red light type of indicator you can just blindly follow. It needs some screen time and training to be able to fully benefit from it, and that's exactly what we do in our Discord community. If you find this video helpful, please hit the like button and subscribe. And if you really mean it with trading, you can join a free version of our Discord community, where I share more setups and education, and you can ask me to get my in-depth analysis on your trade or setup for free. I will choose 3 of your questions every week and give a public answer everyone can see and benefit from. Just click the link below in description. Thank you very much and see you next time.